So for those of you unaware, Australia, Victoria, New South Wales, the biggest states in particular, have been trying to really get COVID cases down over the past 3, 4, 5 months to little success. And really, it's a decision has been made by the government to really try to adopt a similar model and approach to basically all other developed nations of learning to have society as open as much, and to basically accept that hospitals will be busy and COVID will always, at least for the foreseeable future, be an occurrence in throughout society. So definitely huge macroeconomic ramifications and effects on the Australian economy, hence why I bring it up. So, industries such as construction, which is relative to other developed nations, a big percentage of Australia's economy. And then as well as just general small businesses and companies being able to I suppose go back to business is definitely a huge point to mention to kick off this week's update. As I mentioned last week and possibly the week before, we've seen in the past 5-7 days a continued increase in the price of energy globally. Whether that's coal, aluminium, or also oil and even iron ore have all been rising strongly in prices. So in the case of China, the government essentially lifted the prices of energy in an attempt to ease what was a shortage of supply. With electricity prices being allowed to rise by as much as 20% against a certain benchmark. So Bloomberg here calling it its most dramatic reform in many years. So that did cause the aluminium price as well to reach its highest point since 2008, with the process of, I suppose, working with aluminium requiring a lot of electricity. So naturally kind of increases the price and is correlated to the price of aluminium as well. So why am I even telling you all this? This is all very, very important because it has to do with this background narrative of concerns over inflation increasing, which has definitely been the story of the past week. And even going back, as I've covered in other videos, it's been definitely a growing concern for policymakers all around the world and central bankers. So we got more, I suppose, evidence and more data points that were suggesting inflationary pressures were rising. That came today from Japan with their wholesale inflation rate hitting a 13-year high in September. Again, a big reason why was that rising prices in global commodities. So we've seen several South American nations over the past months raising interest rates in response to concerns over inflationary pressures rising, and increased discussion and fears in just the UK, Europe, Australia, the US, New Zealand, just basically every country. Inflation is just becoming more and more, I guess, of a consideration for investors as well as policymakers. Not by far, but this was last week when we caught up. Probably one of the biggest news items that was driving the market and contributing to fears and jitters in the stock market in particular was fear that the Senate was not going to agree to increase the debt ceiling in the US. So as I kind of predicted back last week, I thought that it would really just be a lot of posturing and grandstanding in Congress, as they typically do, the Democrats and Republicans pushing it right to the nth degree without blowing up the economy, so to speak. And I thought eventually they would compromise. And we've kind of had that scenario play out here with some sort of, I suppose, kicking the can down the road kind of solution with both parties agreeing that the debt limit will increase to 480 billion, and which is forecast to, I suppose, let the Treasury Department pay the bills of the US government until December 3. So look, if nothing really gets resolved and we just end up going to early December with no solution, which is very likely to happen, I would expect more volatility in the short term in terms of the stock markets. And, leading into late November, I would expect this to start hitting the mainstream business news once again, as we did see over the past fortnight or so. And that could then trigger some short-term volatility. So worth keeping in mind there. Speaking of triggers of short-term volatility, Evergrande was back making headlines this week. And it was news today rather that Evergrande, being China's biggest property developer, they missed their third round of bond payments in 3 weeks. So it's more so the effect of what that communicates to the market. Is essentially fears that they might potentially be going broke, and fears of contagion. So I suppose the spread of not just Evergrande's problems, but the spread of their problems negatively impacting other industries and sectors in the Chinese economy, and then also globally, internationally as well. So in this case, it intensified market fears over contagion involving other property developers as a wall of debt payment obligations come due in the near term. So as I've said in previous weeks, the Chinese property developers have been an area of concern for global investors for some time now, and you've seen that reflected in their corporate treasury, their corporate bond markets have really, their corporate bonds have been trading heavily below par, which is basically the market signaling they're concerned over these companies' ability to pay back their debt. So the real concern is more so just if these property developers, particularly Evergrande, do collapse, what is the ramification going to be on the Chinese economy, which is a huge driver of global economic growth? And then also, how does that potential collapse going to impact, other property developers as well as other sectors and industries in other countries? So that's the big fear and big, I suppose, relevance to you as a macro investor or someone who likes to keep up to date with the macro economy. And in terms of this week, probably one of the biggest things to look out for is that earnings season is kicking off in the US. So they just had their Columbus Day holiday, I believe, yesterday on Monday. So they're back. They are back. The markets are open once again. I'm not sure when this actually does kick off, but it will be worth monitoring. I think it's this week. And why is earnings season always so important? So earnings season is really just when the publicly listed companies release their figures and financials to the market. It's always really important from a macro perspective because it's more so to do with the amount of companies that are beating consensus expectations or going worse than expectations. So as I've said previously, markets are all about expectations and versus, I suppose, actual results in many ways. So worth keeping an eye on whether the majority of companies like in the US are really doing better or worse than what the market expects. And that will be something that I will be keeping an eye on over the coming week. Okay, onto the crypto news, and probably the biggest news from the past week was Bloomberg on Friday citing unnamed sources that in the US, the Biden administration is considering an executive order for federal agencies which would require them to study the crypto industry and provide recommendations on their oversight. So according to the report, the order would include the Treasury Department, Commerce Department, National Science Foundation, and national security agencies, in addition to asking agencies to study different aspects of the industry. The order would clarify the responsibilities different agencies would have around crypto and blockchain, which, for anyone following the crypto industry and regulatory aspects of the crypto industry, that's in the US, that's been a big issue in terms of, how do you divvy up I suppose, who's responsible, which agencies are responsible for overseeing which aspects of the crypto ecosystem, whether it's a derivative space, such as the futures and perpetuals and all of that side of things. And then who looks after investor scams, such as people, basically being scammed online in the crypto space due to ICOs from 2017, 2018. So there's a lot of, jostling for position in between the US agencies. So this was the biggest news, mainly because it shows that, well, if it is true that the US is moving on, clarifying the roles and responsibilities. However, if the order is to get these agencies to study the industry, that's pretty disappointing by this stage. You would think that they would know the industry in a bit more depth than having to go out and study, the what aspects are what really. So, it was also notable that one of the biggest advisors, or probably the person, I think President Biden's technology advisor, or one of them, he has the biggest understanding of how cryptocurrency works and the industry, but in a very bureaucratic kind of twist, or very typical of bureaucracies, he's actually not allowed to give his opinion on what the regulations should be. Let alone he's not even allowed to be on the drafting of the whatever bill gets drawn up, because he holds, I think it's $1 to $5 billion worth of Bitcoin and other cryptocurrencies. So really, it's when you have such limitations like that, it's going to be, I think, some time before some sensible kind of regulation comes through, unfortunately. I did hear a good analogy. In many ways, it's almost like saying someone who owns a share, stocks in one company, isn't allowed to comment on how the overall stock market functions or is regulated. Pretty frustrating to hear that that person won't be allowed to contribute. But very relevant. Anything to do with US regulations and crypto, always very relevant, just because of how much influence they have on, I suppose, the regulatory approach taken by other countries who are a bit more on the fence and hesitant to kind of lead with regulations before seeing what the US does. Okay, some big news also from this week was Bakkt. So one of the biggest Bitcoin and crypto marketplace custodians, they announced a partnership with Google to extend the reach and usability of digital assets to meet rapidly evolving consumer demand. So, just more, I suppose, collaboration with getting, Bakkt in particular, working here with Google Pay. So just making it easier for US citizens to use Bitcoin and to access and buy and sell Bitcoin and convert it from fiat. So, it's easy to forget that this isn't all happening in the background. Basically, with every week that passes in the year, you're seeing more efforts to make cryptocurrencies, I suppose, more accessible to everyday consumers and investors. Speaking of Coinbase, or rather not Coinbase, I did just want to touch on Coinbase here. Had also been in talks. It's not in this article, but I did see the other week that Coinbase was in talks with I think, to roll out their Coinbase card using Apple Pay and Google Pay as well. And yeah, just on Coinbase, one of the co-founders who's no longer at Coinbase, but his venture firm, Paradigm, which is one of the leading, the industry's leading venture firms and have been around for quite a while. Documents are showing that they are in the process of raising 1.5 billion, a fund worth 1.5 billion. So just it's kind of like unbelievable to see how big the industry has grown in terms of just the amount of venture capital money coming into the space. Saw earlier this year that A16Z, one of the biggest venture firms in the world, they raised their third fund for crypto specific ventures, and that was valued or raised 2.2 billion. So really, it just signals that there's a lot more, I suppose, institutional money that is being willing to, gain exposure to the crypto asset markets and the crypto industry more broadly, particularly the likes of family offices being one of those institutional investors. And speaking of A16Z, or A16Z Crypto is the name of their kind of crypto unit or team. They've hired today, this came out, two of the few people who know what's in Facebook's Novi wallet. So they hired two engineers from the Facebook team who was in charge of the Novi wallet, or Calibra, it used to be called before they rebranded. So just the amount, I suppose what I want to emphasize here is it's not just the amount of venture money coming into the space, it's also the talent that's coming from, so-called like Web 2, the Web 2 world. So Web 2 basically meaning, the internet that's more, I suppose, gated and controlled by, or not controlled, but, the likes of Facebook, Netflix, Amazon really have a lot of power, and users more just have to sign up to these platforms. You're seeing a lot of the talent in that industry come across to the crypto industry, which is very, very pleasing to see. And I continue to see new hires announced, high profile hires announced by some reputable crypto companies basically every day. And this is just the latest of them here. And speaking of just raising really sizable rounds, ConsenSys, which is an Ethereum software company, been around since must be about 4 years now. They are raising again at this time at a reported valuation of $3 billion. So you can see here the latest funding effort comes at a time of considerable growth in the Ethereum space, as we've seen this whole year, with NFTs in particular driving that growth this year particularly. And just a reminder, every Sunday we do post a roundup of the week's venture kind of deals in the crypto industry. So I really like watching or monitoring particularly the earlier stage projects. It really helps with my research in the space, and picking up on trends and potentially promising projects to invest in as well. But for those interested, we have, I guess, all of the stages here, and Sarah does a great job of rounding up all of the week's updates. And this list is just getting longer and longer every week. It used to just be 6 to 8 rounds every week that were announced, and now it's typical to see it over a dozen every week, which kind of just signals to you just how much investor demand there is to contribute and help grow the whole ecosystem. So why does this matter to you? It just should give you more confidence that crypto is here to stay, and that the pace of innovation should continue to just accelerate now that there is more human capital and financial capital to help fuel that growth. Okay, just want to point out that Stockhead they have released a a virtual conference on crypto. So Stockhead is a business news and media publication in Australia, and I did give a presentation on NFTs or non-fungible tokens. I suppose just the value propositions of them, what they are, what some of the challenges facing NFTs are, and I suppose as investors, how we can, I suppose, gain exposure to NFTs and the different options that are available to investors. So, really enjoyed doing that for Stockhead, and with the likes of some other quality presenters as well from the likes of Kraken and CoinJar, and Henrik there from Apollo Capital, one of the most kind of renowned and really well-performing venture firms in the crypto space, and eToro there as well. So I'll drop the link in there. And Ben did an interview as well. So I'll drop a link below in the description for those of you who want to check it out. But some really good content there from Stockhead, who's really ramping up their coverage of the crypto space and asset class. So staying on NFTs, and by far the biggest trend we've seen in the past week has been this emergence of yield generating NFTs. So I touched a bit on it last week in the video last week and expected it to continue growing, and that's exactly what happened in the past week. And so Nathan here, senior research analyst at Collective Shift, did a really great rundown for our members on, I suppose, applying some valuation methodologies to cyberkongs in this case, and their banana token, and really just, I suppose, going over some analysis of how these are valued and whether they are perhaps being really, I suppose, hyped up, or whether there is some substance to them at the moment. And you're seeing this trend of NFT projects releasing an ERC20 token, or I suppose just a token really, a fungible token. So NFTs being non-fungible, so not exchangeable or not interchangeable. These NFT projects are now releasing a fungible token to really align incentives of these communities that are evolving around these NFT projects. So, Cool Cats, for example, being a really popular NFT project where there's individual holders of the Cool Cats NFT, which in and of themselves aren't really, interchangeable or able to be, a market on Binance or Coinbase or Uniswap, for example. These NFT communities are now forming around Cool Cats, and they are now launching these tokens, which are more, I suppose, similar. I'm just trying to keep it really basic here, but these tokens are really similar to just your standard tokens that you see every day, such as like the Uni token or the Comp token or MKR. And you're seeing now like these projects really gaining a lot of attention because they are releasing a token. Obviously, you need a lot of, you can't just release a token and become, successful in the long term. There's a lot of concerns like I still have with how popular this trend is going to be in the long term, particularly when it comes to securities regulation. You've just got to be careful with your design of these tokens. Like a lot of it is really promised as if it's like a sharing of profits, on the back of the work of others, which is essentially what the definition of a security is. So you've really got to be something I'm really kind of monitoring. But I think overall, I'm really still seeing a lot of value in this trend, and I think it's just a great way to, again, align incentives to really just provide exclusive access and things and benefits to these token holders, and to really just drive and really strengthen the community surrounding these NFT projects. And really what kind of I suppose, lit a match under this trend was Bored Ape Yacht Club this week, which is one of the biggest NFT projects in the world. They announced that they had plans at least to launch a token in Q1 next year. I really liked that they just announced that, hey, this is on our radar, but we're not doing it immediately. We're not feeling pressure to do it immediately. What's keeping them is, again, kind of what I just touched on. They are actually working with a law firm at the moment to really make sure that when they do release a token, it is, legally compliant and not breaching securities law, for example. And I really liked how Bored Ape Yacht Club has taken that approach. They've realized that there's a lot of opportunity with these types of NFT tied tokens. There needs to be a better term to them, but those types of tokens. However, they haven't felt rushed into releasing one, which is, I really like to see that. But throughout the rest of 2021, definitely expect this to be a trend moving forward. And we will be continuing to update members on, I suppose, different innovations with the tokenomic design of these tokens and different, applications and use cases that different NFT projects are, building into these types of tokens, which is really the main thing that needs to happen. Okay, just closing up the crypto news for the week. I wanted to touch on this. So Ethereum, so obviously there's been work on the ETH2 or Ethereum 2.0 throughout all of this year and in the past several years, really. And there was a big achievement over the weekend of basically their devnet or their developer network, which is basically just a playground, a test net, an experimental kind of area where developers can really just test all of their code without it having any economic, ramifications or financial ramifications. And they were able to, launch a devnet of the Ethereum 2.0 essentially. So that was really promising to see, and it kind of I have always just expected ETH2 to kind of go live towards middle of next year. So like either Q1 or Q2. I've kind of just had in my head as middle of 2022, just because to kind of build in that expectation that things might be pushed back a bit. But this was really just more validation that things are tracking along really well. And really ETH2 at this stage is looking like it will be coming out in that first half of next year. I'm still expecting more towards May, June, July, but there will be some more updates, and I'll definitely be updating you on any significant, I suppose, roadmap or expectations from the ETH2 team, because it is so important for the whole cryptocurrency space about how well this ETH2, I suppose, development goes, not just for ETH investors, but if this ETH2 potentially maybe gets delayed or things just don't go as well, then that's a huge, just putting like my investor hat on, that's a huge opportunity for, the Ethereum competitors such as like Near Protocol, Solana, Phantom, Binance Smart Chain even, Cardano, Celo, all of those types of ones. So really, like if this ETH2 continues to go as expected, that's going to be really great news for ETH. Definitely. Why is it going to be great news? It's just going to be like the biggest update in Ethereum's history, like about 5-year history, and really like allow proof of stake. It's not really important what proof of stake is for the sake of this video, but it'll really just, I suppose, validate many, many years of research and development if this does go successfully. Just getting into the Bitcoin and Ethereum prices here. And starting with Bitcoin, at the time of recording, we've actually shot up to $57,500 US, which is the highest highest of the past week and the highest since May the 12th. So what's that? That's May to June to July to August to September. So 5-month high for Bitcoin at the moment. And yeah, as I said last week and said to members a few days ago, or pro members at least, I was really expecting Bitcoin to continue higher. I would be surprised, as I've said, I would be surprised if we get to December 31st and I look back and Bitcoin hasn't passed all-time highs. I think you're kind of getting just a convergence of really positive circumstances where Bitcoin is now just ready to go another leg higher. Particularly I'm talking more about its resilience in the face of really like negative or historically what would be negative news for Bitcoin, particularly that China crackdown that happened last month. And then I suppose, negative commentary, or what would normally be perceived as negative commentary from SEC or Gary Gensler, the chairman of the SEC in the US. So for those reasons, Bitcoin's just really held up, surprisingly in many ways, really well. And there's just so much capital now parked on the sideline to get into Bitcoin on any dip that happens. It really has me encouraged that we will see all-time highs at some stage before the year is over, potentially even this month. So yeah, it's really, on the daily time frame at least, Bitcoin's above those three major trend lines, a 50, 100 and 200-day moving average, looking a bit overbought at the moment on the RSI, or relative strength index. So could potentially cool off a bit or trade a bit sideways for the next few days. But yeah, it's been such a promising rebound off of that flash crash that we saw a few weeks ago. And I suppose even more importantly for you to be aware of is just how Bitcoin has performed in the past week or two in this kind of risk-off environment globally, where you've seen, tech stocks really sell off heavily, and a kind of a rotation you've seen of risky assets into more less risky assets in the past couple of weeks, which throughout July and August, whenever that happened, that was really bad news for Bitcoin, because it was really correlated with sell-offs in the stock markets, but that hasn't happened in the past 1 or 2 weeks, which makes this move in the past fortnight even more impressive for Bitcoin. So yeah, things are looking really, really good. Not really sure what to expect in the next few days, because I'm not a TA, a trader by any means. I'm definitely more of a 5 to 10 to 20 year kind of time horizon with this sort of stuff. But in terms of the market sentiment and conditions, it's all kind of all very bullish, I suppose, at the moment. When things get overhyped, I definitely my ears kind of pricked and will prick. I kind of, just off history, you can kind of tell when things are getting a bit crazy, and a bit, I guess, fervorish and just, way too positive of an outlook. I don't think we're there yet. I think that would happen after all-time highs. So yeah, that's the state of play there for Bitcoin. And for Ethereum, back at $3,500 US, and not as overbought as Bitcoin, which I want to get to just quickly. But yes, ETH on the daily time frame still trading above that 50-day moving average, which is important for ETH investors who are wanting ETH to go higher. I did just want to close on this Bitcoin dominance, and it's kind of been a return of the king, so to speak, in the past, month now, where Bitcoin dominance has grown from 40% up 6 percentage points to 46%. So that's an increase of 15% in the past month of Bitcoin dominance. So for those of you unaware, Bitcoin dominance is essentially just Bitcoin's market cap as a percentage of the global market cap of cryptocurrencies. And it has been really struggling all week. I mean, all year rather, particularly if you look at from March to May. It basically went from mid 60s, early 60s to 40. And that was like its lowest in a very, very long time. As you can see, like Bitcoin dominance has most of its life really been trading above 50, and definitely like majority above 60. So to see it fall all the way to 40 earlier this year was quite remarkable. And yeah, it's definitely been just a notable kind of trend to watch. You've seen that's kind of like why Ethereum isn't being so overbought and why altcoins are not really performing as strongly in the past week or two relative to Bitcoin. This is basically the answer. It's because Bitcoin dominance has really just ticked up and gone on a rally. Reasons why, it's not super obvious. It's more just a trend worth watching, in my opinion. I think some of it could be due to just speculation that a Bitcoin ETF, a futures-based Bitcoin ETF, still a Bitcoin ETF at the end of the day, in the US could be approved before the end of the year. That could be a reason why Bitcoin is outperforming the rest of the market. But to be honest, it might also just be a correction of what has been extremely like a plummeting Bitcoin dominance. And it might just be a reversion to the mean, so to speak, with Bitcoin kind of just taking back some control of its percentage of the total market cap. But if it like, I wanted to close on this because let's just say, Bitcoin does go on a rally and it does surpass all-time highs. And then also Bitcoin dominance would continue increasing. I want to bring this up at the end because this is where you would then see, after that, you would see a rotation back into altcoins. It's like clockwork in this asset class. Whenever you see a huge run up in Bitcoin, it's almost like a lag effect into the more riskier assets. So I wanted to bring that up with you at the end because, yeah, Bitcoin has definitely been on a run relative to other crypto assets. So whenever it does that, I'm always looking to see where the money is flowing after that rally higher, which many times you see a follow-up run in the likes of, ETH and Solana, Binance, or BNB, all of those larger cap crypto assets. And then things can also get a bit more speculative and higher price rises for those lesser market cap cryptocurrencies. So yeah, all worth noting. But yeah, that's the state of play at the moment. Thank you for tuning into this week's macro and crypto update, and I will see you again next week.